Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I did not post yesterday because I woke up and my internet was down. I called my ISP, my internet service provider, and it turned out to just be the whole area that I live in. So there was nothing I could do about that. I didn't have internet for most of the day yesterday, so I took the day off. And of course, Sod's Law dictates that since yesterday was the one day I couldn't upload, yesterday was also some of the largest news in the financial world that I've seen in months and months and months. So anyway, today I've got some very important things to show you. I had a CBDC presentation that I was intending on uploading yesterday. That is here. So you can see I've got this massive thing about the central bank digital currencies. This is going to have to wait until tomorrow now. I could have done this today, but the news and the stuff I want to cover today is just far, far, far more important than all of this. So look forward to seeing that tomorrow. For now, like I said, incredibly important things to go through. We have had a pivot from the Bank of England just when I was starting to doubt myself. If you've been watching the channel for a while, you'll know I've been calling for a central bank pivot away from hiking rates for months now. For 2 or 3, 4 months, I've been saying that we should get to September, and September, or maybe as late as October, would be the time when we start to see the pivot. I have to admit, after the last FOMC, I was starting to doubt myself. I was thinking, is this time different? Are they actually going to blow this whole system up on purpose? That is still a possibility. But having seen what's just happened from the Bank of England, what I'm going to go through today has reaffirmed that actually I was not wrong. I was wrong to doubt myself. We are going to see the pivot. We have started to see the pivot. We just haven't seen it from the Fed yet. But we will. I'm still convinced of that, even though I was starting to doubt myself. Every time they spoke at FOMC, they sounded more and more hawkish, and I was starting to think, oh no, like this is, what have I done? However, don't believe the Fed. The Fed has a history of lying. They always lie. I'm going to prove that to you today. So first of all, we've had a pivot from the Bank of England. So I'm going to go through this. We've also seen the Bank of Korea pivot to QE as well. Japan have been defending the yen. The Fed and the ECB will be following soon. They will. And I'll go through the charts. We're going to have a difficult couple of months on the charts, but the read for me is clear. So the Bank of England has announced it's going into the gilt market to perform yield curve control. This means it is going to be buying bonds in order to reduce the yield on the bonds. As I said a minute ago, it's not just the Bank of England that are buying the bonds, it's also the Bank of Korea. They have stepped in to put a bid underneath the bond market to bring the yield down. The bond prices are inversely proportional to the yield, so stepping in to buy bonds brings the yield down. At the same time, we've got Japan spending 3.6 trillion yen, $25 billion in FX intervention last Thursday, and we are seeing them come out only a couple of days ago and defend their bond buying program despite the yen weakness. So these central banks have pivoted now. We are starting to see this return to QE. This was inevitable. I'm kind of mad at myself for doubting this, but you have to, as a trader, have strong opinions that are weakly held. You have to be willing to change your opinion if the market gives you a reason to do so. So let's break this down. The Bank of England will carry out what it said is temporary purchases of long-dated UK government bonds as of yesterday. So I have said temporary. I put this temporary in quotation marks here because this is just like when the Fed said inflation was transitory. Temporary never, ever, ever means temporary when a central bank says it. And I can guarantee you that this will not be temporary purchases of long-dated bonds. This is a direct quote from the Bank of England. Purchases will be carried out at whatever scale is necessary. This means unlimited quantitative easing, unlimited printing of money. They're going to do whatever it takes. And so the question is why? Well, because as the yields are high, debt snowballs, because the higher the yield, the more interest they have to pay. As the debt snowballs, the pound, the underlying currency, falls as a result because people lose confidence in a nation that is higher in debt. So by buying bonds, they can bring the yield down because they're inversely proportional. The second reason is the bond market is blowing up. This is the UK gilts. These are supposed to be the safe and stable investments. The pensions that hold an enormous amount of these will go bust if the central bank didn't step in, and the pension funds would have been forced to sell equities at the lows to cover the losses in these bonds. And finally, the pound falling means inflation is getting worse because the currency is coming down against everything else. So it takes more of those weakened amount of currency to buy the same good or service. The cure for inflation is actually more inflation. And this doesn't sound intuitive. It's not intuitive. But this is only because inflation lags by 18 to 24 months. If they step in now and print a load of money, they can use it to prop everything up in the system. And that is what we're seeing. That's what we're seeing. They're stepping in, printing money, and trying to prop everything up. All this really does is slow down the rate of explosion temporarily. But that's because the inflation lags by 18 to 24 months. So whilst they can step in now and prop things up, 18 to 24 months in the future, it's going to get a lot worse. So where does this money come from? Well, of course, they print it out of thin air. Inflation right now is nearly 20% in the UK, in the real world, not by their CPI metric. But you wait until you see inflation 18 to 24 months from now, after they've done exponentially more QE than they did the last time. So in addition to hiking rates, not being supportive of the underlying currency, which is a trait of an emerging market, when you hike rates, it should be supportive of the underlying currency. But the fact that it isn't in the case of the pound, the fact that the more they hike rates, the more the pound dived off a cliff, this is a hallmark of an emerging economy, not a developed one. And in addition to that, they're now running QE, money printing and bond buying, whilst they're hiking rates. They have turned the printers on whilst inflation is still very high. This is what a loss of control looks like. Understand this point here. This is what a loss of control looks like. Bitcoin is an IQ test for risk, and you better hold gold too. I was very pessimistic about the consequences of utterly irresponsible UK policy on Friday, but I did not expect markets to get so bad so fast. A strong tendency for long rates to go up as the currency goes down is a hallmark of situations where credibility has been lost. This is exactly what I was saying. This is what a loss of control looks like. They are now drunk at the wheel, drunk and asleep at the wheel. The Bank of England is on the brink of a third bailout for banks. Why have I included this? Well, because if you know your Bitcoin history, there is a hidden message embedded into the Genesis block of Bitcoin. The Genesis block is the first block, the block on which all the subsequent blocks are anchored from. And this Genesis block contains a hidden message. The Times, 3rd of January 2009, Chancellor on the brink of second bailout for banks. This is why Bitcoin exists in the first place. And here we are, 13, 14 years later, and the Bank of England is about to make the exact same mistake all over again. This is what Bitcoin is for. If Bitcoin cannot thrive out of these conditions, then it will never thrive. This is make or break for Bitcoin. It's not just the UK bond market that's breaking. All bond markets everywhere are breaking. You can see that from the move of this is the VIX for the bond market, and it closed today at its second highest point in 13 years. The bond market is blowing up. Let's keep going, because every time the move gets above 155 on this bond VIX, the Fed is having emergency meetings to cut to 0% or print. Bailouts are being constructed, and or bond traders are running around with their hair on fire. Then you add to the mix that liquidity is worsening as measured by Bloomberg. The level of illiquidity occurs when the bond market is dysfunctional. Who wants to buy these bonds? Who wants to buy these? Why would you buy a bond that's yielding 3 or 4% when inflation is running rampant, and now we're seeing the central banks start to print even though they haven't started pausing or lowering rates yet, and even though inflation is high, they're still printing more money. Why would you buy a bond like that? You just there's no reason to, and this is why we're seeing them become more and more illiquid. At the same time, the Bank of America's financial stress indicator is getting worse by the day. In the past, when this was the backdrop, the Fed was cutting to zero and printing like mad. But now, however, we have ongoing quantitative tightening, and the market is still pricing in a 75 basis hike at the next FOMC, whilst we're seeing everyone else start to print. I mean, the wheels are coming off of this thing. The bond market is very big, very opaque, and very complicated. This is why it blows up regularly in 2008, 2019, 2020, and now again in 2022. Bitcoin is about to become a safe haven asset. There's nowhere else to hide. Bonds are supposed to be safe. You can't hide there anymore. Bitcoin is decoupling. A move to $220,000 can happen in a flash. And if that sounds crazy, remember that currencies all around the world are tumbling. And Bitcoin is holding strong. Bitcoin is not tumbling. And remember that the global bond market, if this melts down, all it would take is 7 to 8% of that fleeing bond money to flow into Bitcoin, and we would be at $400,000 per coin. Global debt is 400 out of the 900 trillion of assets on the planet. Meanwhile, Bitcoin's market cap sits under $1 trillion as of the time of recording. So how do we trade out of this? How do we proceed going forward? We have basically seen the pivot for some of these central banks. I'm convinced we're going to see the pivot from the ECB and the Fed and the remaining banks very, very soon. The reason I'm convinced of that is because with everyone else running QE, with everyone else debasing their currency and printing more money, this will start to mess up the import and export charges. This will start to get trade out of balance. Remember, whenever somebody devalues their currency rapidly, then it forces everyone else to. This is why all these nations hold FX reserves, so that they can step in and defend their own currency or debase other people's currency. Where one goes, the rest must surely follow. And it's only a matter of time now before we see this pivot from the ECB and from the Fed. So with that said, right at the start of this video, I pointed out that the charts are going to be difficult for a couple of months, potentially, but the read for me is clear. And so let's get into how I see this. I'm pretty sure I've got a very good read at this point, so I'm going to move into this now. First of all, I have been telling you on this channel over and over and over again that we will likely find the final low for the Bitcoin 4-year cycle around the 11th of November, and it's from there that we will emerge into a new bull market. I'm also noticing Bob Lucas, the king of cycles, is putting this out, and this weekly cycle low for the S&P 500 would line up perfectly with the 4-year cycle low for Bitcoin. The dollar is likely going to run 120 in a final blow-off move. I would be more surprised if it didn't run to 120 than if it did. At that point, I expect to see a massive top in the dollar, and I would also expect to see this pivot from the Fed and the yields stop being so forward-looking. They've told us they only want to go to 4.5%. They might have one more rate hike to do. They told us that at the last FOMC. We were saying maybe 100 to 125 basis points as a max, so one, maybe two more rate hikes, and then we're likely going to see a pause. We're very close to having this priced in. However, remember, they are accumulating over $1.3 trillion of debt every year because of the rates being up at this level. Actually, this is 3.8%. 1.3 trillion would be at 3.5%. So who knows? I haven't got the maths for that at the moment. Let's keep going. So here's the S&P 500. I've marked the cycle lows. This looks like we might have run the stops and be about to bounce off of here, but the fact that we pierced this low means we've had structural breakdown. And I said when I tweeted, I haven't got the tweet, let me get the tweet. I said when I tweeted this, long for a trade here because the risk was so good, and flip short if stopped out. So we've been stopped out, that means we need to look for shorts, but that doesn't mean we just flip immediately short. We will likely get a small bounce up from here that drops down into that cycle low. Here is the next cycle low due around the 2nd of November, and because it's a weekly cycle low, wouldn't be surprised to see it overshoot this. But we know that this cycle low is likely a bounce out of the half cycle low, and we'll get a move down to find that daily cycle low around November time, right around the time that we expect to see the move for Bitcoin to drop into its cycle low, denoted here by this green vertical line. So that becomes the target for longs for me. Whilst we're on the subject of Bitcoin, we can also look at Ethereum, which I think will be doing the same sort of thing. We can move this cycle low now to the 11th of November, because that's when we should expect to be longing Ethereum. Ethereum could break out here, but I think realistically, this is much more of a suitable long for Ethereum. Whilst we're here, of course, at the same time, we'll be looking for this trade out of Coinbase. So we've had this for a while now, this yellow squiggle of mine, which is what I would expect this thing to look like. So we'll add one of these. We know that's going to be around the 11th of November as well. So do we get continued squiggle and come out of this as the 60-day cycle low for Bitcoin shows up? I would think so. And I also want to line up MicroStrategy, because I believe that we're going to see the exact same sort of price action for MicroStrategy. So I can put this here. Do we get some sort of wobble into this and then go? I think so. So with all of that said, that is the crypto position. That's how I'm looking to play all of this. I have added MicroStrategy to the watch list. So getting ready for that 4-year cycle, it's coming into focus, saving capital, making sure we're ready to take this opportunity, as they only come round once every 4 years. So from the top, my read on the stocks is that if we do get a bounce out of here, it's going to fail and roll over. This would be a short. If it just wobbles sideways and breaks down, then you can short the breakdown of this, but it likely needs to do some level of consolidation before we get a true breakdown. Then I think we can come all the way down as low as 3,200, maybe 3,300. That remains to be seen. But so this is my read for now, and I think this becomes a buying opportunity. The caveat to this is if we see a Fed pivot and a big breakout of this trend line, then I would say game on. Breakout, retest, resumption, long from there. But based on where we are in the weekly cycle, I don't see this as a likely outcome. Looking for Coinbase, MicroStrategy, Bitcoin, all to come out of this 60-day cycle low. Oil is working its way down towards this 60-65 range. I think if we can get a break above this, this becomes a buy. But for now, I think the bias is still to the downside. When we eventually get down here, this is going to be an enormous opportunity for oil. So again, I'm just noticing as well, look where that is, right around the same time that the equities and the crypto should all be forming its cycle lows. So there's massive opportunity coming up here, and we're actually only around a month away now. Gold behaving exactly as you'd expect it to behave. We had the breakdown, consolidation breakdown. This is a bounce out of a half cycle low before dropping down into its next daily cycle low. Then at that point you would expect a 6, 7, 8 day rally before dropping down into its weekly cycle low, again aligning with the Bitcoin and the S&P and oil cycles. So all of these sorts of things tell us that there is a difficult couple of months. I think even if we're wrong, even if gold gets mega bullish mega quickly, then the best we can hope for is sort of like a breakout here, then like a basing structure, and then it can go. So there's plenty of time to get back in around these levels. You might give up a few percent, but there's also the possibility, and the thing you want to be mitigating the risk for with gold is that we do something like this all the way down to very, very low numbers. So holding that short, we'll continue to hold that short. I think I've said this before on the channel, I definitely have. I lightened up massively when we broke down here out of my long-term accounts, and the plan is to buy it all back heavy when we get to this weekly cycle low, wherever it forms. This might be quite shallow. I wouldn't be surprised if we end up a lot further down. That remains to be seen. Lastly, XRP. I have flagged that there was 3 situations. I said that we might, in the bullish case, form a little ball flag and go. We clearly haven't done that. I said the other 2 scenarios were that we could just bleed back down here, and that would be really disappointing. Or I said that most likely we would come down here, retest this breakout level, and then go. So it looks like that's what we're doing until we're not. All the while we can hold this level. I don't think it's a problem. I'm noticing a horizontal line of support right there. So, that's exactly where we wicked off of as well. You can see that touch here. So this makes perfect sense. If we can hold this level and go, that's really, really bullish, and we would expect to see much higher targets for XRP. However, it would be quite painful, but it is what it is. Breakouts fail. If we come back down here, that would not be a good look. So for now, long and strong continue to push. All the while we're above this, I see no problem and remain bullish. Lose this level, and I think it is time to manage the risk and begin to look for more entries. And those entries could come from a trendline break, from something like that. So I hope that's clear. Let me know if it is. Let me know if it isn't. I think ultimately all the cycles and everything points to a little bit more downside into that November timeframe, and then I think everything should start to get a bid underneath it. Certainly Bitcoin is going to, I'm sure, be outperforming for the rest of this decade. We're going to see Bitcoin come tearing out of that cycle low in November. For long-term positions such as Coinbase, MicroStrategy, anything that's going to benefit from Bitcoin, I think that is the time that I will be looking to accumulate. Same is true of gold. I think we can expect more downside in the medium term. Even if it's really bullish, it's a very slow moving market. It's only going to base sideways, and that's where I'll be looking to get all my exposure back towards the end of the year. And of course, I am positioned to profit from any major downside. Equity markets, I'm not interested in holding long term, but I will be interested in buying in taking a big long position out of this cycle low, and the same is of course true of the Nasdaq, but I'll use the S&P as my proxy for the US equity markets. So overall, get to the end of this year, make sure we've seen the Fed pivot, which will come very shortly. I'm convinced of that, and then we can go to making big money into the new year. So make sure you're subscribed if you want to see how I deal with this. Make sure you're subscribed if you want to continue to monitor the gold short and the XRP long that I have going on at the moment. I'm looking for shorts on the S&P. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. I'll be putting out a CBDC presentation tomorrow because I put one out 2 weeks ago warning that we were only a couple of weeks away from seeing massive CBDC news, and all of that news is now out. So make sure you come back tomorrow and check out the CBDC presentation. A lot of work went into that. In the meantime, trade safe out there. All the best from me. Take care. Cheers. Bye.